Ladies and gentlemen, good day and welcome to Greenlam Industries Limited Q4 FY23 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Saurabh Mittal, Managing Director and Chief Executive Officer, Greenlam Industries Limited. Thank you, and over to you, Mr. Mittal.
Thanks. Good afternoon, everyone. A very warm welcome to you all to the Greenlam's Q4 earnings call. On the call, I'm joined by Ashok, our CFO, Samad from the finance team, and SGA, our investor relations advisor. The results and presentations have been available on the stock exchanges and the company website. I'm hoping that you all have had a chance to look at the results. So I'll give you a quick brief on how we see the demand situation in both domestic and international market, and then give you an update on where the CapEx situation is with the various endeavors which are ongoing with the new facilities and capacity expansion. So on the domestic front, we believe the demand's pretty reasonable. We've been able to grow both in volume and value across categories versus Q3 sequentially and Q4 of FY22. On the domestic market, with the introduction of products across price points and laminates with the Gujarat factories takeover, we think now with us having products across various price points, our ability to enter markets, cross-sell, upsell partners to higher products, and also fill in the gaps in the market has increased considerably. We are increasing our focus on adding channel partners, going on to more geographies, and introducing new products. With the introduction of plywoods too, we think our strength in the market will only increase with channel, with us becoming more important partner with the dealers and with the influencers. And otherwise, by and large, throughout the country, we are driving more numbers and we're driving more work on ground to be done. On the domestic, I think other noteworthy points would be we think the shift from unorganized to organized is continuing, and we see unorganized companies and players getting weaker, and organized and larger brands and better managed companies getting stronger. So we see that trend in the laminates really, and even in plywood we hear that the mid-sized unorganized companies are struggling with markets and profitability and sales, etc. On the international market, we continue to be focused on the international market as far as laminates are concerned. For certain product categories in the international markets, currently we are constrained by capacity. With the Andhra Pradesh facility getting into production in Q2 of this financial year, there are certain dimensions and for certain markets that will kind of move up the export numbers post the factory starts in. With the Gujarat facility too, we've added certain products, certain markets which in the past, we had ignored we were not able to serve due to capacity restrictions. So overall in the exports market too, we think we should be looking good in the exports market too. Certain markets which were having currency challenges, I think the intensity of the problems have reduced, but there's still some challenges that by and large we think the international business and export business should do well for the organization. So that's probably, more like a helicopter view on where the markets are in domestic and exports. On the performance updates, we surpassed the 2,000 crore milestone in revenues in FY23, and we also surpassed 100 crores in profit after tax in FY23. This is the first time we did as a Greenlam Industries. And across parameters of gross margins, net margins, EBITDA margins, working capital cycle, I think across various operating parameters, we've improved and we've done reasonably good in Q4. Losses in the veneer and allied categories have reduced. Margins in the laminate business have expanded. And likewise, ROCs have also improved to about 24% ex the two new projects of Andhra Pradesh and Tamil Nadu. On the CapEx front, the Gujarat facility has more or less stabilized. We also upgraded the facility with the third production line, which went into production on May 17th. And we hope that very soon we should bring the plant to maybe 80 to 90% utilization level. With the upgraded capacity of Gujarat, the total laminate capacity is now 21 million sheets. This will become about 24.75 approximately with the addition of the Andhra Pradesh laminate facility. The plywood plant should start in the month of June 2023. The Andhra Pradesh plant of laminates should begin commercial production in Q2 of FY24, and the particle board plant should start production towards the end of Q4 FY24. So that's on the capacity creation and expansion which we are undergoing. So broadly, that's it from my side, and obviously I'll be happy to answer your queries and questions in the Q&A session. I will now hand over the call to Ashok. Ashok will take you through the financial and operational highlights of the quarter and the year. Ashok, over to you.
Thank you, sir. Good afternoon, friends. I'll take you through the quarterly performance and then move on to the annual performance. For the Q4, on a Concall basis, our net revenue for the quarter grew by 15.2% on year-on-year basis and grew by 6% on sequential basis to 534 crores as compared to 463 crores in Q4 last year. Gross margin grew by 390 basis points to 48.8% in this quarter from 44.9% in Q4 last year. On a sequential basis too, the gross margin grew by 50 basis points. EBITDA margin was up by 320 basis points and it stood at 13.9% in this quarter as compared to 10.7% in Q4 last year. On a sequential basis, margin was up by 300 basis points. EBITDA in absolute terms grew by 49% to 74 crore in this quarter in comparison to 50 crore in Q4 last year. Net profit for the quarter stood at 46 crore as against 25.7 crore in the Q4 last year. Moving on to annual performance, Concall net revenue for the year grew by 18.9% on year-on-year basis to 2,026 crore in comparison to 1,703 crore last year. Gross margin was up by 210 basis points to 46.7% from 44.6% last year. Gross margin in absolute terms grew by around 25% to 947 crore in this year as compared to 759 crore last year. EBITDA margin was up by 50 basis points to 11.5% from 11% last year. EBITDA in absolute terms grew by 24.5% to 33 crore as compared to 187 crore last year. Net profit grew by 41% and it stood at 128 crore in this year as against 90 crore last year. Moving on to segmental performance. First, the laminate. For this quarter, laminate revenue grew by 16% on year-on-year basis and 7.1% on sequentially basis, and it stood at 492 crore as compared to 424 crore Q4 last year. Volume growth stood at 16.8% on year-on-year basis. In this, the domestic laminate revenue grew by 11% on year-on-year and 2% on sequential basis. Volume growth stood at 26.7% on year-on-year basis. International laminate revenue grew by 20.9% on year-on-year and 12.2% on sequential basis in value terms. In volume grew by 5.3% on year-on-year basis. EBITDA margin stood at 15.6%, a growth of 270 basis points on year-on-year basis, and 320 basis points on sequential basis. Production volume were at 4.55 million sheets at a utilization level of 96%. Sales volume for the quarter stood at 4.67 million sheets, and our average realization for this quarter was 1,008 rupees per sheet. Moving on to annual performance, laminate revenue grew by 19% on year-on-year basis to 18,185 crore from 1,556 crore last year. Volume grew by 3%. Domestic laminate revenue grew by 25% in value terms, and in volume terms it grew by 15.6%. International laminate revenue grew by 13.6% in value terms, and in volume terms, however, in volume terms it grew by 9.3%. EBITDA margin stood at 13.1%, a growth of 40 basis points over last year. Production volume were at 17.40 million sheets and at a utilization level of 99%. Sales volume for the year stood at 17.04 million sheets, and our average realization for the year was 1,038 per sheet. Now I'll move on to another segment, decorative veneer and allied segment, which consists of decorative veneer, engineered floors, and engineered doors. In the decorative veneer segment, revenue grew by 6.8% on year-on-year basis. However, it grew by 4.9% on sequential basis to 42 crore from 39.56 crore last year. Volume grew by 8.4% on year-on-year basis. Revenue of decorative veneer business grew by 18% for the full year to 174 crore in comparison to 147 crore in FY22. Volume grew by 11%. Sales volume for Q4 stood at 0.32 million sheets. The previous 173 crore is for the entire food and allied business, entire veneer and allied business. Sales volume for the veneer for the quarter stood at 0.32 million square meters, and for the year as a whole it was 1.21 million square meters. Capacity utilization for the quarter was 19%, and for the year as a whole was 29%. Average realization for the quarter stood at 859 per square meter, and for the year stood at 877 per square meter. Moving on to engineered wood flooring, revenue for the engineered wood flooring business grew by 20% on year-on-year basis and grew by 22% on sequential basis to 8.5 crore this quarter as against 10.5 crore in Q4 last year. For the year, and engineered wood flooring business grew by 16.4% to 42.7 crore as against 36.7 crore last year. Our capacity utilization was 8% in this quarter and 12% for the year as a whole. Moving on to engineered doors, revenue for the engineered doors business grew by 8% on year-on-year basis and grew by 29% on sequential basis to 6.4 crore this quarter as against 6.9 crore Q4 last year. For the year as a whole, engineered door business grew by 9.4% to 24.3 crore as against 26.8 crore last year. Capacity utilization for this quarter was at 16%, and for the year as a whole it stood at 15%. Net debt for the quarter ended stood at 312 crore as against 148 crore at the end of December 22. This is on account of project debt which was drawn in this quarter. Net working capital for this quarter stood at 66 days, and for the year as a whole stood at 70 days. That's all from our side. I would now like to open the floor for question and answer.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Mr. Achal from JM Financial. Please go ahead.
Yeah, good afternoon. Thank you for the opportunity. Congratulations for the great set of numbers. Just a couple of clarifications I wanted to check on. With respect to the the gross margin improvement, if you could elaborate a little bit, and specifically if I look at the EBITDA level improvement, QOQ, quarter on quarter, it's a fairly large. While the gross margin improvement is 30 bits, the EBITDA margin improvement is 280. So just wanted to understand, is that entirely due to operating leverage? Is there any write-backs or anything which we should be aware of, sir?
No, Achal, there is no write-back in terms of that. So there are a couple of things. One, the revenue went up from, in comparison to last quarter, revenue were up by nearly around 32 crore. And gross margin has improved 48.9% to 49.2%. The expense were not gone up in the same proportionate. And some of the expenses, like we did not do in this quarter, which may happen in the next quarter, like one of the advertisement bursts which we do normally every quarter. So that is not happened in this quarter. That may happen in next quarter. So yeah, some of the what you are seeing, some of this one expense may go up in the quarter, but overall trajectory will remain on towards the higher EBITDA in comparison to last year what you see.
Understood. Is it possible to quantify, sir, what is the A&P in this quarter in absolute number and compared to 3Q and 4Q of 3Q FY23?
I will come back to you on this.
No problem, sir. The second question I had with respect to volumes, I mean, if I look at the volume growth of 17% YY, obviously it is great, but it's also to do with the low base. So how do we look at the volume growth for FY24? And if you could also give some sense about domestic and exports, how the volume growth would look like.
So for volume growth, Achal, capacity available to us in FY24 will be roughly the full year or 11 months capacity of 3 lines of Gujarat. And the Gujarat factory started last year, probably end of August, September. So we'll have that capacity available with us. We'll also have the Andhra Pradesh plant getting into production in Q2. So clearly capacities available will expand, and also with us entering certain set of markets, certain segment of markets which we were not meaningfully present in, also drives more volumes. So clearly, I think if you look at FY24, we should be looking at maybe like a 10-12% kind of volume growth, at least. Yeah? We're talking laminates right now.
Yeah. So in the last quarter, you had talked about, I think, 13 to 15%. You would maintain that when you say at least, I presume you would maintain that, or you think?
Well, I have not made my note of what I talked last quarter, but obviously the endeavor will be in that direction. And like I said earlier in the call, also for certain export categories, we're running full with certain capacities, and those capacities are Andhra Pradesh plants. When they get into production, I think we'll also have a little bit of push there. Those are normally the bigger size laminates, so you might not see big quantity numbers growing, but you'll see hopefully reasonable value coming up there. But it should be in that direction more or less.
Got it. Just a clarification on this margin part. What is the margin you think? Because for the full year, the laminates EBITDA margin was somewhere around 13%. What is the number one can look at, or the range one can work with, sir?
So hard to give a margin, but as we talk right now, with higher revenues, with more size and scale, with costs at the moment being about stable, and as you probably know, in laminates business, we have a big chunk of exports and imports coming in, and we were severely under stress, in FY22, with margins and costs going up, and that's kind of normalized now to pre-COVID level. So more or less, I think on-ground situation looks normalized from a sea freight, and sea freight impacts us in import and in export in terms of costs. So I think if we are able to drive the volumes, and we should be looking at, and with the way things are looking now, if something dramatically changes, obviously one can't say about that. We should be looking, in a decent range in what we've done in maybe Q4 types. We should be somewhere in that direction.
Got it. I'll come back in the queue for follow-ups. Thank you so much.
Thank you. The next question is from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yeah. Hi, sir. Thank you for taking up my question. So just firstly, follow up on the previous participant. So what kind of revenue growth should we expect? Are you expecting to take any price hikes, given that the Gujarat plant will be more of a mass market product? So will the revenue growth be lower than the volumes?
So overall, as a company, we are saying we should be like at 20-25%, revenue growth, considering the Gujarat plant, considering plywood plant starting in the month of June, and also considering Andhra Pradesh factory starting in Q2. So we should be like at 20-25% kind of revenue growth target for FY24. As far as price hikes are concerned, I don't see us taking price hikes in laminates or veneer products. While, as you know, that we always work towards improving the value mix of the product. So maybe the prices per sheet increase may not happen, but if you are able to improve the value mix by selling higher value-added items, maybe the price relation, kind of still improves from where it is right now.
Understood, sir. So, similarly, sir, what kind of debt level should we be looking at in FY24? And of the capex, if you could just highlight that how much we have incurred for each project and what is expected in 24, that would be helpful.
So for this project, for these two new projects, which is plywood and laminate and particle board, we have spent close to around 450 odd crore till now in this, and we expect another around 500 crore will be spent in this, and some might move on to the next year in terms of that. And in terms of net debt level, we were at around we were at 312 crore in this quarter. We expect that to be in the range of around 750 crore by end of this year.
This is net debt, right?
Yeah, this is net debt.
Okay, sir. Thank you so much for answering. I'll fall back.
Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and one now. The next question is from the line of Sneha Talreja from Edelweiss. Please go ahead.
Hello, sir. Thanks for the opportunity and congratulations on great set of numbers. So just wanted one clarity on the exports front. We have actually on the domestic front, while we have done great amount of volumes, it's a very strong growth. On exports front, we are not yet back to the volumes that we have achieved. One thing that you mentioned was that, AP plant will come, and right now it's capacity utilization constraint that you have. But how were we earlier doing, at least 20 to 30% higher volumes in the exports market, which was a previous high? Some clarity there would be helpful.
So I'm not sure. Are you asking what the volumes are? Are you saying we're not achieving those volume growth in exports? Is that what the question is?
So how were we earlier doing higher exports if we are currently lacking capacity? We had earlier done much higher export volume.
No, but we're not doing exports. So Q4 in volume growth is about 5.3% more than Q4 of FY22, and value is about 23% higher. And versus Q3 sequentially, the export volume was over 13%. So I'm not sure what the question is. Yeah, Ashok ji can answer.
Yeah, as you mentioned previously also, in this year for couple of quarters we had challenges in some of the export markets where the currency challenges and all these things, so which has impacted in, let's say, Q2 and Q3, and we are now slowly and gradually coming back to normal. If you can see in this quarter, the growth was in volume terms also, growth was 5%, and in the value terms also the growth is there. What sir was mentioning, in some of the variant we had the capacity constraint, which is primarily the bigger size of laminate, wherein as of now we have more orders, but we cannot ship because of the, even though the overall capacity may not be within 100% because of Francis, but in the Francis we manufacture only 4x8 kind of a thing. The bigger variety we are having more orders, which will get resolved once our Naidupeta plant comes in, because there we will have all the three sizes. That's what.
Understood. So that will happen from Q3 onwards, because Q2 we'll have the commissioning happening.
Yeah, we will have for the Naidupeta, it is planned in Q2.
Understood, sir. And you also mentioned on the margins part, which is helpful, that operating leverage, certain amount of gross margin improvement. So given that our volumes will only increase from here on, are these sustainable margins that we should assume from the coming quarters?
Well, like we said earlier, the environment of costs, if it is in front of us, so if we're able to drive more volumes and maintain realizations by constantly working on value mix improvement while we also while we also push for more volumes in every segment of the market. So yeah, maybe we think we should be able to sustain it, but one can't say for sure in certainty. But yeah, we think we should be in this space.
Understood. And then lastly, on the door side of it, with whatever Ashok sir was mentioning on the call, the numbers part, I think numbers for the doors division look sequentially as well as YoY down. Any significant thing happening on the doors front? Would you like to highlight any vision for this particular segment from the doors and the flooring business? How are we now looking at this segment, given that we also have particle board, plywood, all of those coming up?
Yeah. So if you look at quarter-on-quarter, flooring business is at 7.8, which is a 25% value down. But realization has gone up because we've not been able to do any exports in both floor and door segment, because of challenges in the markets. And at that point, the sea freight conditions and imports and exports, all the restrictions were there. On an annualized basis, flooring is done about 16.5% more than FY22. We've done about 42 odd crores. And doors done about 11% lower overall, which is at about 22.42 odd crores. So we think we're very close to kind of bringing the business to profitability. I think with costs, more or less under control, we need certain volumes. We need more volumes in the segment to improve, the business. The realizations have gone up in both the flooring and the door business, because largely the focus has been on the domestic market in this business. So yeah, that's where we are on this business.
Understood. So that was helpful. Thanks a lot, and all the very best.
Thank you. The next question is from the line of Praveen Ranjan Sahai from Prabhudas Lilladher. Please go ahead.
Yeah, hi sir. Thank you for taking my question. So it's related to the laminate and allied product business. If I look at from the last 3 quarters, your realization is continuously going down. Is it because of some product mix, or the softness or the correction in the prices, you are reducing the pricing?
Yeah, Praveen, as you see that we have entered into liner or maybe the starting category of the laminate from the with the start of our Prantij plant, which is at a lower price point. So that we are not reduced the price in general for our laminate, but on account of this, yes, the overall price realization did look to come down a bit, but that is being met through the value mix increase in the other business other than the Prantij business. But yeah, there is some impact on the overall. But there is not much of a, if you compare from the last year, let's say Q4 of last year it was 1,001. This year also it is 1,008. So which in fact is going up by 0.7%. Yeah, of course, if you compare from the quarter 3, then it is like 2% down on a sequential basis. But nothing in general price reduction has happened as well.
So the way forward, we can...
Give me a moment, sir. Sir, on the management's line, sir, there is a slight static on the line. So if you have a receiver, can you please pick up the receiver and speak?
We are from the Polycom.
Polycom. Okay, sir, no problem. I would request the speakers to, speak a little bit farther from the Polycom. Okay. Please continue. Thank you.
Praveen, on the pricing, like Ashok rightly mentioned, there's been no general reduction, and there's a marginal reduction in realization versus Q3. That's what Q2 should be. In certain cases, case to case, we have corrected due to competition intensity and with RM costs coming down, sea freight coming down. We have corrected some, pricing, but it's very, very marginal.
That's helpful, sir. Can you also give some color on the domestic and the export realization? Is that the domestic is on the lower side versus the export?
Yeah. So as of now, if you see the domestic prices are lower in comparison to export prices, and that's because the difference in the unit, if you see in the domestic side, mostly the 8x4 laminate sheets are being sold, whereas in the export market, there are bigger size laminates as well as the boards are being sold, where the unit realization is higher than the sheet prices.
So it's a part of the product is a bit different in exports. They are thicker products and maybe larger units also. Yeah. So maybe this is not the best comparison, but for simplicity sake and to bring something for certain calculation we arrived at.
Thank you, sir, for that. But related to your veneer, segment, I can observe that on the sequential basis, the production has been down, whereas sales has improved in the volume terms. So like you had a production in the last quarter and which you are able to sell in this quarter. Is it something like that happened?
That's what my guess is. Yeah. That's what my guess is, yeah. You check the maths. Yeah.
Okay. Thank you, sir. Thank you for taking my question.
Thanks.
Thank you. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Hi, sir. Good afternoon. Am I audible?
Yes, sir. Please proceed.
Yeah. Okay. So first of all, in terms of the total project, is there all the ongoing projects, is there any cost escalation which you look forward to, like in the particle board and the laminates plant?
So there could be certain escalations in civil cost, in construction cost, etc. Yeah, but it's all more or less manageable. But in machineries and all, not much escalations. And somewhere sea freights have come down, which were taken early. Not been able to exactly determine it, but there could be some escalations in the cost.
Okay. Fair to assume that they would be closer to 5%, not more than 5% than the earlier stipulated capex?
Well, plus minus a little bit. Hard to give you a number at the moment. but it's more or less in that range.
Okay. And secondly, this 500 odd crore which you are expecting to spend in FY24, could you give a breakup of the same across the three units, ply, laminates, and particle board?
The capex for FY24.
We will share that offline.
Sure. And if, the volume guidance which you are giving, slightly north of 10%, isn't that conservative number given that you have 5.5 million sheets capacities from the Prantij plant, which will be ramping up, I assume, at full utilization this year. Even this AP plant, which you'll be setting up, given that you are already constrained of capacities and you have a strong distribution both in domestic and exports market. So are you building up a slow ramp up? Are there some constraints which will slow down the utilization of the new factories?
Nothing like that, but we're just seeing that sometimes just to convert the action into reality just takes some time. So I don't think it's conservative. I think it's more reasonable that there are always some of the other surprises which come in. Obviously, we'll not stop at 10%. If we can do more will be done. I think that's more fair to expect that.
Mm-hmm. Because what sort of utilizations we should factor in for the Gujarat plant and for the new Andhra plant, assuming the Andhra plant is available for 6 months and the Gujarat plant is available for full year now?
Yeah. So Gujarat plant is already 7 months it is up and running, and we are as of now it's close to around 75-80% in this, and we have told in the beginning of the call also at expanded capacity we are expecting the similar kind of a thing in the next year, in this year, and for the Andhra plant we have budgeted 50-60% in the first year from the day the commercial production starts. So let's say 6 months is the budget for at 50-60%.
Okay.
So the difference will be there. It's a more sheet and board, whereas the other plants are predominantly only sheets.
Correct. The other plant means Gujarat only sheets, low end sheets.
Mostly sheets.
Correct. So, if we build in those sort of numbers, we would be looking north of 20% volume growth. Am I missing something?
How would you say? Because we just run the math. Ashok will run the math again and maybe, chat with you on that. Okay?
Sure. I'll come back in queue. Thank you.
Thank you. Participants who wishes to ask a question may press star and 1 now. The next question is from the line of Rishikesh Bhagat from Kotak Mutual Fund. Please go ahead.
Hi, thank you for the opportunity. So 2 questions from my side. Firstly, with regards to this foray into the plywood, now considering the plant is fairly close to commercialization, now where do we see the A&P spend and probably promotional spend? How would they stack up for FY24? That's my first question. And second question is related to particle board. Now, considering the sea freight correction that you highlighted, obviously imports must have also gone up. So, any impact you have seen on the particle board industry because of the higher imports?
So on the plywood, our strategy is to largely focus on South India and not go pan-India with the plant being in Tamil Nadu. So our A&P spends will be largely localized and not national in nature. And the factory starts in the month of June, you're right on that. So that's on the ply piece. On the particle board, you're right. Sea freights have come down, which definitely expands the possibility of boards being imported. As you are aware that the model of particle boards is that nearly 80% of revenues will come from pre-laminate particle board and not from plain boards. So the whole focus will be on in a way, decorative particle boards, if I may use the term, where we laminate the particle boards with deco paper and then ship to the market. So yes, it will have some impact, in terms of more imports. That's what we're guessing. But by and large, I think from a model, we don't see much challenges because our eventual sale in the market is not plain boards. It's going to be pre-laminated particle boards. The plain board sales, if any, too, will just be a stopgap or a small part of the overall, revenue mix. So does that answer your question?
Yeah. Thank you. Thank you.
Thank you. The next question is from the line of Bhavin Rupani from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. So the first question is, sir, how should one understand the pricing with the raw material cost declining? Do we plan to pass on the benefit to the customer?
So, like we said earlier to some other participants, in general, we have not reduced any prices. Case to case in certain categories, we have done some correction. We might have to do some correction.
Okay, sir. And sir, how should one understand the margins from Prantij plant, Gujarat plant? Will it be possible for you to quantify it?
No, very hard to give you that number because if we produce only a certain category of product in that factory, so independently running the math of that plant vis-a-vis others will not be a fair comparison. So I think we'll have to look at the Prantij plant's margin in totality as a laminate verticals margin. So that's a decision the company is taking on some products to be produced, in some plant and some to be in the other plant, considering availability of raw material costs, freight, etc.
Okay, that's helpful. Thank you.
Thank you. The next question is from the line of Abhishek from DSP Mutual Fund. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. So just a couple of questions. Given that the sea freights have now normalized, how does your overall competitive scenario and pricing scenario in the export markets is looking? Are you able to become more competitive now because that had been kind of been working against us? Yeah, just some thoughts there.
Like you rightly mentioned, Abhishek, the sea freight normalizing our competitiveness versus our international competition, people who are producing laminates and allied categories in respective countries, our competitiveness actually expands with the normalized availability of containers, normalized filling time, and normalized freight. So we think we will be taking away more market share from international laminate producers. And with our base of teams, warehousing, distribution, by and large, in a good position, we think we can take more market share in the international business.
Okay. And so the other thing is also in terms of the domestic laminates, how's the competitive scenario there, particularly from the semi-organized and the lower end of the value segment? Any color there would be helpful, sir.
Not much has probably changed in terms of competition intensity, but we do think and we do know that a lot of the mid-size, lower level companies, are having challenges, with sales and with collections and all of that. So I think as such nothing has dramatically changed, but we think those companies are getting weaker, and we are probably taking some share gradually from that segment.
Okay. And so just usually in the general wood panel and especially in plywood also, since we'll be entering now, are you seeing, the sharp increase in timber prices that one has seen? How will your procurement be? Are you kind of, do you have enough sourcing as far as the timber is concerned? And any repercussions of the same on the unorganized, because their ability to manage pricing is much difficult. So some color on that will be helpful. Thanks.
So as far as timber sourcing from domestic market is concerned, it's relevant to the plywood and the particle board business. And both our factories, plants are coming up in South India. So as we talk right now, we are kind of now entering the raw material buying phase for the plywood factory, for the plywood plant. And I think we'll know more when we talk next. But as we see things now, obviously our wood costs have risen sharply, especially in North India and slightly in South India. Our guess is if wood costs do go up, you go and pass on the price increases to the market. We do know that at the moment the rate of increase in South is lower than North and other parts of the country. But I think we'll be a bit more wiser, in the next 3 to 6 months when we actually go and buy raw material and consume raw material. As far as the unorganized companies are concerned, clearly, I think the organized companies have a better position in terms of when these things happen, because their buying capacity, their payment capacity is superior, and the contractors and farmers and aggregators have organized companies as a preferred buyer than the unorganized companies. Yeah, so this is the sense we have at the moment.
Okay, sir. Thank you so much for this update and wish you all the best. Thank you so much, sir.
Thank you. The next question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Congrats for a good set of numbers. For taking my question. So first question is on what will be our peak revenue potential at current prices when we go to full utilization, considering all CapEx done?
So we said that not earlier, but not all. So considering the peak utilization of Andhra Pradesh plant over here in the state, Gujarat, plywood, particle board, we think the peak revenues will be in the band of 3,500 to 3,600 crores approximately with the investments we're doing now, unless we're able to further improve any value makes or improve utilizations. But so by and large, I think it'll be somewhere in that space.
And can we expect like 3 years for us to reach those levels?
Well, that is the end of what happens with the market. I don't know, but yes.
Got it, sir. And sir, on margins that you said that lower A&P spend, so can you please quantify that number, as in how much was it versus history?
So, for this quarter only, normally one quarter will be in the range of around 6-7 crores.
6-7 crores?
Yeah.
Okay. So this quarter was much lesser.
One portion of A&P expenses, which didn't happen in this quarter, which is around 6-7 crores.
But generally, as in last Q4, how much was it, sir?
Sorry?
For the last Q4 for full year, what was the number? Basically, I just wanted to know how much have we reduced on that.
It has gone up. In the year as a whole, if you see, then it has gone up in terms of that. It's only that one line item expense didn't happen, which is around 6-7 crore rupees only. Otherwise, the overall expense has gone up. Just in
Q4 A&P, line has gone up, but other line has gone up. I don't think there's so much of gap.
If you see in this year, the overall expense has gone up in comparison to previous year.
Okay. And what is our expectation for next year? How much of A&P would we like to do?
It's difficult to give you in terms of that. This will be in line with what it is there in the current year.
I think as a percent probably would be similar, because plywood will have lower revenues and higher A&P as a percent. So probably as a company, percent probably will be similar, I guess. Maybe Ashoka to give you the data on that.
Got it, sir. And sir, last question would be, you said revenue, we expect 20 to 25% growth for this year, but volume side, you said only around 12 to 13%. But you also said that pricing, we don't expect much jump. So can you please clarify?
Yeah, because plywood revenue will also come in the overall revenue. There'll be, we talked about the volume growth of only laminates, not the other categories. So we said that for laminates, 10 to 12% type of volume growth. We also said, prices may not increase, but our endeavor is constantly to improve value mix. And then there'll be plywood revenue coming in for about 6 to 9 months. There'll be revenues coming in for veneer. We didn't talk about volumes of that. So considering all of that, we said 20 to 25% kind of the revenue target growth.
Got it, sir. And sir, our brand is quite good in the market, but if I look at our margins, it seems lesser than the competitors, the Century and Stylum types.
I'm not sure whether what you're saying is correct. So I think maybe Ashok needs to review that once. Because I think you have to see the margins and also you have to see return on capital employed. So as you probably know, sometimes margins can be higher, but ROC gets weaker. So maybe I think Ashok has to run a math with you on that.
Got it. Thank you and all that.
Thank you. The next question is from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Good evening, sir, and thank you for the opportunity. So, my question was on the employee cost. Since you have about 3 new plants coming up in the next 1 year, so what sort of growth should we see in the employee costs?
Yeah, if you see in terms of this also, we are building up the team for the newer vertical. Plywood vertical, new team has been built. We are expanding the team to expand our overall reach in the laminate. So we believe that it will remain in this range bound at least for this year.
Remain in the range bound, so about
the same as a percentage in terms of what it was there in the FY23.
Okay, got it, sir. And sorry, and so if you could throw some light on the raw material prices, like I believe chemical costs have stabilized, but what about costs on the craft paper front? Like, what have the prices been out there?
Yeah, it is stable as of now in this quarter, in the last quarter and this quarter as of now what we are talking. The laminate, the craft and paper prices, the chemical prices, as you said, that it is stabilized and bit softened in comparison to previous quarter.
Oh, okay, got it, sir. Sir, one last question. Sir, if you could throw some light on the unorganized market and how have they been faring, and what would be the price differential, if any, between the organized players and the unorganized players?
Full lesson you will take from Ashok separately, I think.
Yeah, it is already, as we mentioned at the beginning of the call, that it is ongoing process, and whatever we have the understanding and knowledge that unorganized players are weakening on, let's say, on quarter or in other way their growth are higher than the overall industry growth. So we believe that they are taking market share from the unorganized segment in terms of that.
Okay. Any reason why the unorganized sector they are weakening? Any specific reason?
There are a number of reasons in terms of their size, not investing, in terms of that consumer preference are moving, not only in our segment, in every other segment, that consumer segments are moving in terms of the organized product, because they offer the value for money in terms of, cost can be more, but they offer value for money, good quality, good choices, availability of the material. There are n number of reasons that why the people are moving towards the organized segment kind of a thing. And basically the main difference earlier was mostly the people unorganized, they do a lot of evasion, which is also coming under pressure from the government. So we believe that going forward also it is moved towards the organized rather than the unorganized.
Okay, got it, sir. Thank you so much. That's it from me.
Thank you. The next question is from the line of Achal from JM Financial. Please go ahead.
Thank you so much for the follow-up opportunity, sir, once again. The question here is that in terms of the mix for laminates, in terms of B2B and B2C, in terms of end usage, any more perspective you can provide? How much would of the laminate would be directly consumed by the customer, or how much would go in the institutional setup?
We can't provide much information on this, but as you probably know, that homeowners buy laminates which is aided by influencers, which is architects, ID. So if your question is what's the mix between residential and commercial, that's one mix. That could be one potential way to look at it. Or if your question is what's been done by carpentry and what's been done by OEMs. So I'm not sure what you wish to ask. Actually,
yeah.
help me understand more clearly.
Both aspects, if you could.
So I guess overall market would be more like a 60-65% residential, 35-40% commercial, and I'm not sure if that has changed. Maybe geography to geography, some changes might be there. As far as carpentry and OEM is concerned, so clearly we see carpenters, larger carpenters, contractors opening workshops with mechanized furniture, panel manufacturing, and then installing furniture fit-outs on the site. And I can't put a percent to it.
Understood. Where I'm coming from is in terms of the particle board. You did mention that 90% of our sales will be pre-laminated. So I was just curious to understand if if it will come at the cost of the laminates, because ultimately the customer has a choice between the customized laminated furniture or ready-made furniture. So I was just coming.
I'll explain. Yeah, so I said 80%, not 90%. And pre-lam particle board is largely an off-site manufacturing product, which means that one has to work on the boards in a workshop or in a factory or in an OEM setup. So typically, because of the dimension of the board, which on an average will be higher than laminates, and will be thicker, and carrying so many SKUs is not practical on ground in India. So goods from the manufacturing plant of the company get shipped to fabrication plants, directly. So in particle board, mostly it's specification-driven model focused on OEMs or furniture manufacturers doing commercial furniture, doing kitchens at times. In India, usage of boards in kitchens, particle board in kitchens, is still very limited, although internationally a lot of kitchens use particle boards. So mostly it's going to be commercial furniture, loose furniture, study tables, TV trolleys, desktops, etc., which will be consuming particle board. The number of SKUs will be fewer than laminates in terms of design options and texture options. So that's where we are. So currently also, if you see, and we said that in our reports earlier too, really 4,000 to 5,000 crores of market that exists for particle boards. So I think we'll end up taking share of unorganized companies there too, because good quality boards are not available. Quality of lamination is very inferior. The physical and surface properties are very poor. So this is how we look at it.
Got it. Just last question. With respect to this 5,000 crore market, how much of this will be currently imported, and basis our cost of production, what would be the price difference between us and them?
I don't have the math right now because we're still a bit away from commencing it. So obviously we've done our work and all that. So, but maybe we can respond to you in a more meaningful manner at a later point on this particular part.
Got it. This is very helpful, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yeah, thank you for the follow-up, sir. So could you quantify the EBITDA level losses for the wooden door and floor segment for the quarter and the full year?
So for the quarter, floor and door having a loss of 2.7 crore at EBITDA level, and for the year as a whole, it is having a loss of 9.7 crore.
This is both put together? Doors and...
Yes. Doors and floors.
Thank you.
Thank you. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Hi, sir. I have a few follow-up questions. This Andhra Pradesh laminates project, once this particle board is fully commissioned, how much of this the laminates would go for captive uses?
No, so sorry, I didn't hear you clearly, please.
Yeah. So,
am I audible?
Rajesh, yes, sir. Rajesh, I'll respond to this. Rajesh, in this case, when we are talking about the Greenlam particle board, in this the entire laminate is not need to be need to be put on that. It's only the top layer of laminate which is decorative paper that only need to put. So both these facilities are independent of each other. Laminate is not going to be used in most of the cases on the particle board.
No, I just wanted to understand the particle board unit will have a separate laminate unit. I mean the laminate producing unit, or it will be made from the laminate plant which is getting commissioned next quarter.
That's what I was trying to tell you. The laminate, only the top layer of the laminate, which is the decorative paper, only will get. Yeah. So it will have a separate line for this.
Okay. So this capacity does not include the current capacity which you are mentioning?
So the two independent plants, the process of pre-lamination particle board is different from high pressure laminates, which we say laminates, in terms of the pressing line, the dimension, the cycle time, etc. The two independent plants. The only thing common between them, which can be possible, is the deco paper inventory.
Okay, understood. And sir, for the laminates exports market, what is the growth outlook and where are you positioned given the, in terms of your focus on the exports market? Given that you have strong distribution, regional distribution across markets.
Right. So we said that earlier. I think we should look at a reasonable, good or decent growth in the export market. I think this will continue. I think we've been growing at a certain pace over the last several years. I think the state if you're talking of 10-12% quantity growth, it also includes export market. So export market should also grow a little bit plus minus this year in FY24. And we also set certain categories of export markets. Those capacities at the moment, a challenge. But once the British factory comes in, we'll also have some more capacity to push exports in certain dimensions in certain markets.
Okay. And sir, in the particle board, when you talk about the market size of 5,000 crore, could you also explain in terms of volume terms in CVM what could be the market size in India?
Yeah. So I think that match, because we can have an independent, you can have an independent tax to show at a later point. So we have the entire breakup of volumes, domestic imports, prices, realization. So I think that can be independent conversation.
Sir. Great. That's all from my end. Thank you.
Thank you, Ajay.
Thank you. The next question is from the line of Bhavani Kumawat from Phillip Capital. Please go ahead.
Yeah. Thank you, sir, for the opportunity. Am I audible?
Yes, please.
Yeah. Just wanted to understand on the international business front, how is one scenario currently on international side?
Hard to give you one blanket answer because we operate in about 100 countries right now. But overall, I would say if I use the most appropriate word that comes to my mind is reasonable. Some markets are doing better than the others. But like we said, with sea freight conditions normalizing and with us expanding more capacities, we should look at taking more market share from international competitors.
Okay. So just wanted to understand about your distribution model in international business versus the international players here.
Sorry, will you come again?
So I can explain in very brief. I can give you a quick brief. So it has a dual approach. We have a distribution model with partners. Again, it varies from geography to geography. I must say that first. So we have partners holding stocks on ground and then going out to joineries, cabinet manufacturers, furniture producers, etc. Some large OEMs who ship directly, because they have a lot of consumption. But we have sales teams in most markets which work with the channel partners. In certain markets, they work with the architects, interior designers, builders, developers to generate demand. So different geographies have a slightly different operating model based on the condition on ground.
Okay. And what will be the pricing difference accordingly, sir? With the international?
Again, very hard to give you one blanket answer because different geographies have different product offering in terms of thickness, dimension, etc. So, we can't give you one flat answer because every geography has a slightly different approach. But as you can see, the average realization of exports is slightly higher on a per sheet or per board basis because certain markets of exports take more or consume more larger size products than the normal 4x8 which gets consumed in India.
Okay.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you everyone for joining the call today. For any further queries, you can get in touch with us or to the SGA, our investor relations advisor. Thank you.
Thank you, everyone. Thank you so much.
Thank you.
Thank you very much, sir. On behalf of Greenlam Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.